Hi traders, Nathan Bray here from ACY Securities. I want to have a chat to you today about the PMI data that came out around the world yesterday. So it came out from Australia, then in Europe, followed by the UK, and then a few hours later in the United States. What it gives us an indication on is whether economies could potentially be weakening or strengthening. And the way they do that is they service all of these purchasing managers and they work out whether companies are purchasing more for their businesses or whether they are needing to purchase less because their economies are contracting or they don't have the need. So it's a very good gauge. And it's a good gauge in that it comes out around the world within sort of a 24-hour period. Now, the issue is that when you have data, for example, come out in Europe, okay, it might be weak. People might look at it and think, quick, I need to get short the euro dollar, only to find out that a few hours later, when the US data comes out, believe it or not, because we're on the same planet, okay, using the same global economy, it comes out with weak data, which it did. And then you end up with this big sell-off, say in euro dollar and pound dollar, only to have it completely reverse later on in the day. Now, folks, that is something you want to keep an eye on. So the technical structures or price action structures I'm looking at. So if we look at, say, the US dollar index, okay, we can see at the moment it's in this sideways range. It very much has been for most of this year. So when price is in the middle of a range, like it has been, we might get some weak data or positive data, and you suddenly get this move higher or lower, depending on the data, only to have it revert back to the mean. Because when price is in a sideways pattern or consolidation, it means the market doesn't really know, and therefore you can be affected by data when it comes out. So one option might be to trade the data and keep it a very short trade, knowing that you could get some short-term advantage like we saw in this euro US dollar yesterday, only for the US data to come out negative as well, okay? And it suddenly reversed as we saw. We saw the same thing with the pound against the US dollar. And for me, what I really wanted to see at the end of the day. So today is the day I'm looking at it, and I'm looking at it and saying, has much changed? Not really, okay? What we are seeing, however, is contraction and confirmation that the global economy is weakening or the economy is actually getting smaller regardless of what geographical location you're in. So folks, looking at this US dollar index right now, it tried to get above daily or weekly resistance. So up around that 103.60 level. So I watched it sort of spike through as the US dollar gained strength on weakening European news and weakening pound news, only to see by the end of the day that it failed back below that resistance level. So therefore, one option may be to avoid trading until we know the full scope or the data comes out around the world so that we can have a better idea of how the market's reacted, folks. That could be one option, or keeping those trades very short term when you have counteracting data being released in a single day. That's all from me, folks. Good luck with your PMI trading in the future.